Okay, hi everybody, we're back. I'm Susan Billeaud, the lawyer for your business. Today we're talking again about buying a business, and as sort of a baseline, and this is true whether you're buying a business or starting a business, there are going to be some costs and obligations associated with running that business. So we're just going to kind of hit on that loosely, just so you kind of know. These are some stuff that some of this most of my clients have researched and may be well aware of. Some of it is sometimes a surprise. So we're just going to kind of hit a 30,000-foot view and see if any of them surprise you. So first of all, right out of the gate, you're going to be paying filing fees. But even once you have paid your filing fees to organize your business, assuming you're starting a new entity, you're going to have to pay continuing amounts of money for annual reports. Usually, almost every state that I'm aware of requires you to update your information annually and will charge you a fee for doing so. You will also likely have to pay some sort of business license, which is a sort of tax. Sometimes there's some occupational taxes that are baked into that as well, and that is usually a function of a local county or a parish. But it's something certainly to consider. And then you're going to have some costs associated with tax return preparation depending on the entity you elect. So if you, well, actually the entity you don't elect, if you are running the business yourself and you are a sole proprietor, or you're an LLC and you have not made an election to be treated otherwise, the company itself will have no tax return. The profits of that business will just appear on your 1040, as it would whether you ran it without an LLC. It's the same circumstance. It goes on your personal return, and there's no separate return. However, if you are running it as a general partnership or an LLC with more than one member and you have not made any particular tax election, the default provisions make you a partnership. And if you're a partnership, you will have a separate return for the business and then, of course, one for you personally. So just consider that. Same thing with a corporation, same thing with an S corporation. Each of those entities, regardless of the number of owners, will also have their own tax returns. And again, when I refer to them as entities, that may or may not be related to the way you organized it on the state level, but these are all how the IRS and how the state revenue departments will treat it. So just consider those extra costs. Some of the things you have to do if you've elected to run it as a separate legal person, maybe not a partnership, but you've decided to file as a limited liability company, an LLC, or a corporation. You're going to have some meetings from time to time. You're going to have to elect officers, boards of directors. Perhaps if you're running it as a corporation, or if it's an LLC, you have that option, or you can run it as a member managed or a manager managed company, and so there may be some paperwork, some minutes, some unanimous consents, and so on that you have to keep to do those things properly. Some other events that may trigger the requirement for a meeting would be the sale of most of the assets, all of the assets, sales of the company, making a tax election that you haven't already made upon formation, even approving the articles or the bylaws or the operating agreement, depending on the style of entity that you've formed. All of those things touch upon record keeping, opening bank accounts. You'll get unanimous consents from your bank. You'll want to keep a copy of those in a folder, a file, a minute book, a binder, wherever you're keeping those types of things. Any kind of ownership transfer would also trigger the requirement for a meeting. But what if you don't do that? What if you fail to keep the proper records? Well, the penalties, depending on the circumstances, can be nothing. Or if you ever end up in some form of litigation, there can be allegations that you were running the company improperly, you were running it as an alter ego of yourself, and as a result that any liability protection that you would have earned from having run the company as a corporation or an LLC would be diminished or eliminated. And so your personal assets and the company's assets may actually both be on the hook for the business's liability. So that can be a rather expensive and big deal and quite a shock. So best to just know how to administer whatever type of entity you decide to form when you're buying the business. And then also consider representation and litigation. If you have decided to form an entity or you're in a partnership, those are considered legal entities, and in most states you will be required to hire an attorney to represent you in court. So even if you're the only owner of your company, even if it's a small company, if it's ever sued or if it ever sues, you will not be able to just show up like you can for yourself and represent yourself. It's a bad idea anyway, but it's just something to consider when you're planning. It's just going to be another cost of running your business. If you're buying it, presumably your business is going to have some value already, but if you are starting it from nothing, sometimes an early lawsuit can be quite costly. It mostly has to be defended. And then just consider when you are dealing with a company, even if it's exclusively your company, if you formed it as a limited liability company or you've incorporated, that you also have ethical obligations to that company. And that sounds very strange, but the fact of the matter is you have created a legal person, and in most respects that company is going to be treated in a fashion that is separate and apart from you, and you have to respect that delineation or else suffer some of those consequences, such as in subsequent litigation having your assets on the hook for the business's liability. So just some stuff to think about if you're going to organize your business that you are purchasing as a corporation or as an LLC, or if you are purchasing the ownership interest in a going concern, the entire company, of course, the stock or the units or the ownership. There are formalities associated with that. There are formalities that the prior owners should have observed, and there are certainly formalities that you must observe in order to maintain the liability protection afforded by those entities. So it's a good idea to, again, talk to an attorney, talk to somebody who can understand where your company and where your business is at and guide you accordingly. So that is our topic 4, costs and obligations of running your business. I'm Susan Billeaud, the lawyer for your business. See you soon.